right, welcome back to Build Your Legacy Insurance Edition podcast. How's it going, Travis?
Bill, it's going good, man. How are you?
Yep, doing good. Good to see you.
Yeah, I was gonna say, good to be back in the studio. Appreciate you giving me the day off the other day.
That's right. That's right.
I was working, right?
Just probably in the truck, not in the comfortable leather seat that we have.
Exactly. Not podcasting.
Yeah,
right.
I'd say recliner, but I don't think these things recline back.
Yeah, well, and now I'll tell you, the truck seat, the way it's been cold recently, has been very comfortable with those heated seats.
Yeah, there you go.
So, it
good invention there.
Yeah, listen, I don't know how we survived without it.
Hey, look, at my kids are spoiled with it too. The first thing they do in the morning, they push the seat.
Oh, my kids make me go turn it on for them so that they can get into it already warm, right?
Okay. Mine don't do that. So
yeah, we're bougie in the Collier household.
Yeah, you're just their servant.
Yeah, I know my role and I try to play it well.
There you go. Good deal. Hey, it's profit sharing time of year.
It is.
Or we're getting close to it. How about that? I don't know if we've seen much come in yet.
Yeah,
but we know it's coming.
We know it's coming. We're starting to get the figures in, right? Expecting to get the checks, and so we wanted to hop on here, because from my side, when I'm working with, agency or potential agency owners that are either leaving captivity or even producers from independent agencies, right? They haven't had access to it, so they don't really know what profit sharing is. And so as we're going through how much value we bring in that arena, sometimes I would say kind of glass over a little bit.
Yeah.
Because it's not something they truly comprehend or understand. And so we wanted to break it down a little bit about what it is.
Right. And we've done a podcast on the 5 layers of compensation.
We have.
So now this is just bringing it down to specifically what is profit sharing, who gets it.
Yeah. Yeah.
And what do you look for? I mean, we can kind of answer some of these questions because, like you said, so many people don't know what it is.
Yeah. Yeah. And, especially those that have never had access to it.
That's right.
Right. And so I think the one thing you want to hit on with the profit sharing, traditionally, not everybody has access to it. Right.
That's right. That's right.
A lot of times what we see in the independent channel with it is it's tied to your size.
Well, I would say let's start with it's a performance-based.
It's a performance-based bonus.
Right. So whether you Google it, you do whatever you want to do, it's going to be, Google's probably going to tell you this is a performance-based incentive program or performance-based payment maybe that independent insurance agencies receive for hitting certain metrics.
And every carrier is a little different.
Absolutely.
They're not all the same, right? And a lot of times it's dictated by what their goals are or what their role is in the channel. Right. But I mean, oftentimes it's tied to your size premium wise, or sometimes you'll see it as far as policy count. Right.
Yeah. So I think that would be the first place to start.
Yeah.
Is in a lot of cases, this is a table. Doesn't always have to be a table, but in a lot of cases, it is a table. There is usually a minimum premium threshold that you have to be at to even qualify for this profit sharing.
To even be eligible.
So sometimes there's different variations. Sometimes carriers will give somebody hey, you just represented us or just took a contract with us. We'll give you something to get you going, maybe.
Yeah, like I'd call it an accelerated or new partner.
Yeah, new agent thing.
Yeah,
I think one of the first requirements that most carriers have, there's got to be a certain amount of premium.
There's got to be a certain amount of premium. And in my experience, that premium threshold they want you at is typically where their volume commitment is going to be.
Yeah.
Right. They're kind of saying, hey, we want you here within a time frame.
That's right.
And that's kind of your, hey, if you're hitting those metrics, it's a good partnership for them. Whereas if you're not, I don't want to say you're on the chopping block, but there always is that chance that you're kind of in that gray area to where you might not be considered as valuable of a partner for them.
Right. And then on the flip side, as valuable, we'll keep on the premium side of it. The bigger you get, the more premium you have, the more valuable maybe you are, and the more potential there is for compensation.
Right. It's reflected in that table, right? It's the typical little X and Y axis, and you're going to find your size on there. And the further you go to the right of that quadrant, you're going to see larger opportunities that reflect that value.
Yeah.
For sure.
Yep. So it doesn't mean you get the higher multiple, the higher number, but what it means is you have the ability, because your premium is higher, there's bigger numbers there than
Correct.
somebody that just barely qualifies. That that number's lower.
Right. I mean, it's I say it all the time. It's a pay for play game, right? You kind of make your premium commitments, but then the other side of it is, your size dictates your compensation at the end of the day. And we're seeing that more and more, that this is becoming, very stringent, I guess is the best way to put it, with a lot of these carriers on, they're really trying to value those and show that value to those agents that are growing and are achieving more success with them.
Yeah, absolutely.
Right?
And I think we can come back to that, because I think the biggest piece, well, I don't say the biggest piece, but the piece, we call it profit sharing.
Mm-hmm.
It's called profit sharing for a reason.
Right.
There's that premium access, to your point, but then there's got to be the loss ratio side of it for profit sharing.
Correct. The loss ratio is the other kicker there. Just because you reach a size doesn't mean that you're profitable.
That's right.
Right. And so they're going to look at your loss ratio, which, for those that aren't really familiar with it, they're basically going to see how much they paid in claims.
That's right.
That prior year compared to the amount of premium.
Or they set up in reserves or things of that nature. But what their expense factor is, are going to be
for that book of business.
That's right.
And typically, you'll also find carriers that will have different expense factors in there, like your commissions or different things that will also be part of the loss ratio.
Yeah, or part of the ratio.
The ratio together.
Yeah.
Excuse me.
Yeah, because in the insurance world, these carriers are looking at their total combined ratio.
Correct.
The goal for them is to be under 100 combined, for them to say they've made money in the insurance product, in the insurance world. And they just kind of simplify it for us. Most of them do, and just say, hey, if your loss ratio is here, that's what you can help us control.
Yep.
Then they control their expenses,
The expense factors. Yep.
to get up to their combined ratio. But they do reward us for our eyes on the ground,
Yes.
are looking and helping them write business, and write business that performs better than others.
Correct. They want you to write good, clean business, right? They want you to do the right things from limits perspectives, things like that, to keep that loss ratio lower.
Yeah.
And they're going to reward you for that.
That's right.
Factoring that in, the lower that loss ratio is, the larger your premium is, the more opportunity you have to earn in the bonus
Yeah,
side of things.
they need independent eyes on the ground. And we can pick on something just as simple as agents got to tell the truth. They got to make sure those clients are telling them the truth. Put your eyes on a home. So if we just pick on a home, somebody could say, hey, that roof is brand new.
Yeah.
Well, maybe the roof is really 20 years old, and it has a different risk factor. So the carriers need to be able to either charge appropriately for it to get the right premium, or not write that risk. And really, you're the person, the independent agent's the person that can say, yep, I've seen it, it's good, or this client may not be telling me the truth here.
Well, it goes back to the partnership side of things, right? I mean, the agent, for all intents and purposes, is the frontline underwriter.
Absolutely.
Right? We've been charged with, like you said, finding good risk, finding risks that fit that appetite, providing full details on that risk that are accurate so that the carrier can charge the
appropriate,
the correct premium to secure it.
Yeah.
Right. And the other side to that is, you want to make sure you're doing right by your clients as well. And if you're not being accurate up front and just simply chasing the lowest premium for them, they're going to find themselves in a position potentially when they do have a claim that they might not have the correct coverage, or they might be in void of their agreement because things are not accurate on the application.
Yeah, absolutely.
Nobody wants that to happen.
No,
Right?
that's just a bad thing for the carrier, for the agent, for the client. That's just not good at all.
That's not good for anybody. But you want to be profitable in what you're doing. It starts with your frontline underwriting, because, like we said, just because you're larger with a carrier doesn't guarantee a profit sharing check.
Right.
You've got to make sure your loss ratio is under control. And what we see oftentimes with carriers is that number typically starts around 50% or lower, right? A few of them might go a little higher, right? But 50% is a good sort of starting point.
Yeah, I would say you need to be under 55, some under 50.
Yeah.
Are there some wiggle room there at 57 or some even at 60? Yeah, but I'm like you, it's safe to say do everything you can to keep it under 50.
Yeah, I mean,
now a lot of times you don't have any control of your loss ratio after it's already been on the books, but the better business you write, that's just kind of what you're hoping for.
Right. I mean, the better business practices, things like that, help control some of those uncontrollables.
Yep.
In a way. But being able to write good business is the priority in general.
And so on your XY axis, like you said, the lower the loss ratio, the more money the carrier is going to make, the more they could potentially pay you in return as well. So we already talked about the premium going one way, and the higher the premium, the more they can possibly afford to pay you.
Correct.
The lower the loss ratio, the more they could afford to pay you.
In a perfect world, you're as low as you possibly can be on your Y axis and as far right as you can be on that X axis. And that's going to give you the best opportunity to maximize your profit sharing.
That's right. Yeah. So like you said, if somebody's at a 49%, if the cutoff is 50, that payment's going to be lower than what it would be if they were at a 0% loss ratio.
Correct.
That'd be as low as it could be, really.
I mean, so again, it really is an opportunity to share in the wins, right?
That's right.
It's the company incentivizing you to grow with them, to write the right business, do the right things for your clients while also, maintaining profitability for them. And they're sharing that back with you, saying, hey, thank you.
Yep.
You did a good job. Now, the kicker is it's not guaranteed.
No, it's not.
Right. The annual profit sharing check's not guaranteed. And as you mentioned, that's one of the unique things about SIA of North Carolina and SIAA as a whole, because of our size, because of the relationships, we've been able to negotiate some guarantees for our members.
Right.
They're few and far between in the marketplace, but we've been able to guarantee some form of compensation for our members so that they don't have to guess and hope.
I think that's where it goes back to the previous podcast with the 5 layers of compensation. Is we have so many different ways for our partner agents to get paid. Mm-hmm. I think this was really just more of an explanation of what's profit sharing. It's a great time of year to be talking about it because a lot of times profit sharing is distributed to the agencies February, March, April. The carriers get the year-end results, get it to us, they start calculating everything, and then the check or direct deposit would come, shortly after.
Yep. It's typically paid out by the end of the first quarter.
Yeah.
Is what I've seen. But, it's one of those where, we've talked about it in other podcasts, as an agency, how do you manage for it? How do you budget for it? Those types of things. And so, this one right here is more of just basic. Hey, if you're a new startup agent, if you're looking to step into agency ownership and you don't really know what profit sharing is, you're going to have all these different potential options there. Your carriers are going to talk to you about it. Your potential partners are going to talk to you about it. Just understand what it is.
Yeah. And how to get it.
Yeah. And how to get it.
And what you need to do on your end.
What you need to do to earn it.
That's right. I think that really dug into the profit sharing piece of the 5 layers of compensation. So
yeah, I think it's a good one there, and we can wrap this one up and, come back and see you guys again next week.
That's right.
All right. Well, thanks for joining us.
We'll see you next week. Thanks for tuning in. You can catch our Build Your Legacy Insurance Edition podcast on YouTube, Apple Podcasts, Amazon Music, Spotify, or wherever you get your podcasts. Be sure to subscribe, leave us a review, or send us over a topic recommendation at podcast@siaofnc.com. If you're interested in learning more about what we do, visit us online at www.siaofnc.com. We hope you enjoyed our newest episode. See you next week.